One. Hey everyone, this is Andrew Casertano with Capital Strategies podcast where we help people with their finances. Today I have a very exciting guest on who is a seasoned wealth advisor and an accredited asset management specialist, and her name is Adrienne Rowles. So welcome to the podcast, Adrienne. Excited to have you.
Oh, thank you, Andrew. I appreciate the opportunity here.
Awesome. So can you talk a bit about your background and, you know, when you got started in this industry?
Sure, I'd be happy to. Years ago, I was in the mortgage business and I owned a couple of mortgage companies when I was in Boston in my 20s, but I had always wanted to be a stockbroker. So eventually I decided to change careers and I got hired by Morgan Stanley Dean Witter in the Palm Beach area in 1998. And I was trained at the World Trade Center in New York for 3 weeks with their company, but was eventually based back in Palm Beach area. That was during the high flying tech years. That's when we were really active at bringing technology companies public. So I was very active in the IPO space and building technology portfolios, aggressive portfolios, and so forth. I was also doing a lot of options back then. So it was a very fast moving, fun time to start in the business. And then eventually the tech boom did start to crack. And so I was offered a position at the First National Bank of Palm Beach, which is the oldest trust company on the island of Palm Beach. It was around since the 1920s. And it was there that I started to work with fixed income. And that's where I learned how to select municipal bonds, what to look for in corporate bonds and government bonds and so forth. And it was also where I learned how to basically manage trusts and design trust portfolios and create legacy planning for people and their future generations. I stayed with that company for a number of years. Um, and then I went independent with Raymond James for a long time, which is where I was able to basically round out my skill set and use what I'd learned from my first two firms, how to be an independent advisor and provide all sorts of services for my clients at that time.
Gotcha. Great. Yeah. So, what made you start to have a more hands-on approach with your clients of looking at, their portfolios weekly and making adjustments? What made you do that?
Well, I was really intrigued with individual stocks. When I was early in the business, I really studied each and every company, all the details, all the financials, and I really sort of I enjoyed it, and I had a little bit of a knack for it, I guess. So then, when I was working for that trust company, in the few stocks that I was working with for them, because mostly everything was municipal bonds and more of a fixed income portfolio, what I realized is people really wanted to have bragging rights. They wanted to own certain stocks or they had inherited the stocks and it was important to them. So what I realized is there was an emotional tie to it. And so when I was creating portfolios for people, um, I really wanted to gear it towards something that they were proud to own and that it was also fruitful for them. So there was a slight emotional element to it, but obviously it has to be very purposeful. And I have to be the more objective person when I'm buying for clients or selling for clients. I can't be emotional about that stock necessarily. So what I found is when you were, out and about dinner parties or whatever, people always wanted to talk stocks back then. So it was a great time to be in the business. And still now, people are always asking about, where should we put my money? What are the trends? It's more about trends rather than a particular stock, the way it was back in the 90s and the early 2000s.
Gotcha. And
Mhm.
you have a designation, the AAMS. Can you
Mhm.
talk a little bit about that, what that stands for, what that entails?
Oh, absolutely. The Accredited Asset Management Specialist accreditation is really the study of modern portfolio theory by Harry Markowitz. It's really the basis of long-term investing. It's a very popular technique. And modern portfolio theory is the study of diversification and asset allocation. So there is a little bit of a science to it. It basically helps you maximize returns while minimizing risks along the spectrum by weighting the portfolio appropriately with certain sectors and trends. So not to get too deep into the woods about this, that's kind of the overview on that. So that's how I build my portfolios for my clients now, if they are long-term investors, because I'm not a trader. I mean, I did trading back when I was early in the industry, but I don't do that anymore.
Gotcha, but you keep a
Mhm.
close eye on trends and you make adjustments on portfolios as needed. That makes sense. Can you talk about you also have a five-star wealth management uh, recognition for 3 years in a row. Can you talk about that briefly, what that entails and how you got that?
Sure. It was awarded by a company called Five Star Awards, and they review advisors throughout the country and in certain regions. And there's 10 rigorous criteria that these advisors that are candidates have to pass. And this is a peer nominated award. So I was not aware that I had been nominated for this award. And what happens is they'll look at your assets under management, any complaints, the ethical courses that you take, and like I said, 10 rigorous criteria. And so I was awarded it 3 years in a row when I first got back down to the Washington, D.C. area. There were about 17 advisors out of 7,000 in the Washington, D.C. area that in 2023 were awarded this recognition. And it's published in Fortune magazine and in the Washington Post each year, announcing the awardees.
Wow, so you said 17 out of 7,000. Those are pretty good odds. So that means you're in the top, what, 0.2% sounds like? Something like that, if my math is correct. So very, very big deal. That's awesome. So let me ask you this question, and I think I know the answer. You have all these accreditations, you do this for a living. Do you suggest people do this with their own portfolio or have their brother-in-law who, gets talks about these awesome gains? Like, uh, what, what kind of, you know, what should people consider with the portfolio? Uh, Wealth advisor, should they do it themselves? Should they have someone else do it?
Well, I'll tell you, if you have lots of time to read numerous publications a week and really stay on top of the daily news, it's almost, I hate to say 24/7, but you have to really have a pulse on everything. Then if you have that kind of time and you don't mind being tied to your desk and on your computer, go ahead and give it a try. I do feel like the heaps of education that we have to go through, you and I, Andrew, and our licensing, all of our continuing ed, which is many hours per year, really keeps us tied to the industry with the trends and the changes and really making us be very effective with our clients. I don't think that people should be willy-nilly with their money. When you hire an advisor, it is that we are less emotional about your money than you are. So we're going to be able to make, presumably better decisions with your money potentially
Yeah.
than you are. But, there's always the exceptions to the rule.
Yeah, absolutely. It's nice to have a professional. If you want to gamble with some of your money, maybe do that with a small portion on the side,
Right.
but you don't want to gamble away your entire retirement portfolio and that could be, a terrible thing to happen. Let's talk a little bit about what you consider when creating portfolios. Um, you talked about the portfolio theory, modern portfolio theory. I know you also like to look at trends, 6 months out. Is that correct? And what other things do you look for?
Right, exactly. Well, what you'll find are most people that are on Wall Street or the institutional people who I really try to follow a lot of the institutional people, even though I'm a retail advisor, is that we tend to look 6 months in it out. We're trying to see what would this portfolio look like 6 months out? What are the trends going on now? And how would this be in 6 months? So that's really important in my time frame. So for now, now that the election is over, and not to pick about any sides or anything, we know which trends will prevail and which ones will probably underperform now that we have a bit of a roadmap. And so I am, building portfolios or adding to existing portfolios with key components of that.
Yeah, absolutely. And you're talking about the election and, who knows what's going to happen. How do you walk clients through these turbulent times? And it seems like there's always something in the news that is, scaring the market or exciting the market. But how do you keep people, invested for the long term?
Well, a lot of that is doing our initial discussion and our initial meeting is to really determine if I'm the right fit for them and if they're the right fit for me. So it has to be a two-way street. I can honestly say I'm fortunate enough that I really don't get any calls when there's turbulence out there. My clients do seem to understand that, hey, it just comes with it. I like to tell people we don't measure the distance from Boston to Florida with a 6-inch ruler, right? Remember, so you
Good
have to
one.
visualize that. We want to be sure that you take a really high level view and understand that, there are going to be trials and tribulations and ebbs and flows. But if the overall trend is going in the right direction, okay, then that's what you want to look for is a trend. Every now and then, if you're going to have a portfolio of 25 or 30 positions, there might be one that just really is struggling and having a hard time. How long do we want to be patient with it? And that's a decision. So again, taking a 30,000-foot view on things and not letting it consume your every day. I say to people, please try not to look at the market every day. Please try not to look at your statements every month. Try to give it once a quarter, take a look at it once a quarter, and just let it do its work because there are 4 economic cycles that we generally have to get through.
Yeah. And can you talk about what those economic cycles are and where you think we are in currently?
Absolutely. So the 4 economic cycles are the first one would be called expansion. Okay, so that's when the economy is growing, the GDP is increasing, and unemployment is low. Okay, we actually seem to be in that space right now, and I will get to the reason why in a moment. After the expansion, the next step is the peak. The peak means that it stopped growing, it's level, the GDP is leveling out, and or the growth I'm saying is leveling out, and GDP dips below 2%. So then we're going to just sort of sit in this space for a while because we know it's coming next, right? That's called contraction. Contraction is when the economy actually starts to shrink and you have rising unemployment, and so on. And then so that's rather a painful part, but it's still moving. Okay, that tends to be a phase where there's still action. Then we go into the trough. The trough is where the economy reaches its lowest point and starts to rise. Okay, this is what we're coming out of. That's why we're going back into the expansion. We've just left a bit of a trough. It was not a recession necessarily, but it was a trough. And we're now at the expansion. So we are in a growthy period. The bull market is here now, but a bull market doesn't go straight up. And people need to understand that.
Absolutely. And how long do bull markets usually last? I know we had a very significantly long one. We've had one for ever since '08, and it went for a very, very long time. I think it was like the longest bull market we've ever had. How long do you expect this bull market to last?
So a bull market tends to run anywhere from roughly 8 to 12 years. And then in a bear market, a true bear market is generally around 2.5 years. So you can see that a bull market is around longer than the bear market. And that also helps people feel a little bit more comfortable if they say, oh, okay, I just have to wait this out for a couple of years. If you can manage people's expectations, and be realistic with it, I think they have a much better peace of mind.
Yeah, absolutely. Absolutely. Um, well, wonderful tips. Anything else you want to add in closing or things you want to tell you know, people thinking about, hiring a wealth manager such as yourself of um, any final thoughts?
I think it's fine to interview a number of people if you wish. I think it's very important that you feel like you resonate with them. Does this feel right in your gut? Is the answers to the questions from the advisor something that makes sense? I mean, does it add up? And I think you really have to use almost a sixth sense sometimes to be sure that it feels right because we don't want you to just listen to someone who's trying to make a sale to you. You want to really instinctively feel right about your decision because this can be a long-term relationship.
Yeah, I completely agree. It's better to be in a relationship than someone who's just transactional and, someone who you'll never see again. That's definitely something I think is underrated in this industry. So thank you so much, Adrienne. Thank you for your time, and it was my pleasure to speak with you. And thank you for being on here.
Thank you very much, Andrew. Appreciate
Okay.
it.